How you Warriors? Fed week? Everyone ready? See how much trading we could get in before the alien invasion from the drones. What do you guys think it is? Morning, Blake. How are you? Hi, Marcus, Bran, Sinatra. Hi, James, Mike,
Good morning, Coach.
AJ, Richard Adams. Hi, Blake. How you doing? So
I'm doing good. It's Monday. It's Monday morning. It's
it's
Monday morning
yeah,
of a holiday week.
it's the last full week of action here.
It
So
is.
Uh, I thought I'd start with this. Guys, see the weekly on the bonds here. Now they have to rally here. I keep looking for reasons to get long. And there've been a couple of nice waves, but I mean last week was pretty ugly, and I have to be open to the bear case, which would be taking out the October lows. So I don't know where they're going to try and dig in their heels, but I think we have to get back over this line, this vertical line around 94 to stabilize it and say they're okay. Otherwise, I think that we're going to have a problem. TLT would measure down to 73, which is quite a bit underneath this if we're going to have a third drive. So real critical week in the bonds. They should have the edge with the Fed, generating some kind of pop, but this is something to keep in mind. You don't. The reason is a lot, Blake. You've heard the move index, right? I mean, you look.
Yes.
Do you look at it?
Yeah, I
Okay,
do.
so all right. So here's the rationale, because the move index right now is showing no stress in the bond market. Okay,
It's like the VIX of the bond market. It's
but
showing volatility expectations, you
are
know.
low, are
Yeah,
low.
they're very low.
Okay, so some people interpret it as bullish because bonds are going down, because they say this is a measure of stress in the bond market. So the market's going down and there's no stress. A lot of people are buying bonds because of that. I think it may take some stress to put in a low, and we could end up handing off a sovereign debt crisis to the new administration by then. So, anyway, very important week in interest rates. I agree that, we need lower interest rates, but sometimes, you know, you don't get what you want or what you need. So,
Right?
I differ with Mick on that. You don't always get what you want, but you get what you need. Sometimes you don't even get what you need. So, anyway, I wanted to start with that. Just food for thought that, you know, what's going to happen to everything if yields go that much higher? I think it would, you know, uh, be higher than a $109 if something like that happens. Because I'm like the rest of the market. I'm looking for places to short the dollar up there. Anyway, let's get back to last week's action. Tip my hat to Ryan down here on Thursday, because I didn't make the Friday morning, or was said this Friday. He bought EG at major support. That was a that was a that was a real nice trade. And while that was happening, it was mainly because the pound was weak. So this was a day I was selling pounds when it was taking out the moving average here. So I'm still bearish. I think we could rally and sell rallies. I kind of want to fade the Fed um, this week. So I'm still looking for lower numbers in cable, but that was a great trade, Ryan. And this is what I was going to share is, so say, for example, I know a lot of us are looking for another low in euro. Um, I know Grega is, and, down here around 102-ish. Okay, that would be taking out this low by a bit down here. We could be weeks away, days away. But what I would be looking for now that this has turned, and I think it turned, I mean, it was a big weekly reversal, is I'd like to see the euro trading at 102 and euro pound not making a new low. Okay, the spread turns before the market. So if they really take the euro down and this low holds, say we're putting in a higher low when that's happening, that's another reason to buy the euro besides maybe divergences and targets and just something else you could use for confirmation to buy the euro if it's at new lows and euro pound isn't. Okay, so what are we doing this week, Ryan? Are you here or is
Ryan is off today and tomorrow. Dale, good morning.
Oh, good morning, Kman. How are you? Decent
Yeah,
weekend?
very well, thank you.
Good weekend?
Yeah, well, I twisted my back, so let's say the weekend wasn't that good. But
Oh, wow.
now we're sitting in,
Sports?
now we're sitting in front of the PC. It's all going much better.
Okay. All right, buddy. Yeah, sometimes we have how did you injure it?
Just
I
moving boxes around from the
Oh
move.
yeah, the move, yeah. We
My
still think
Amazon,
we're
my Amazon warehouse
yeah.
needs a bit of a cleaning.
Yeah, you got to put that weight belt on, support
Yeah,
the back. Anyway, nice pop in metals today.
yeah.
What do you I think it went to your
26.
zone in
Yeah, yeah, 26, 30, 40, good hold right now. Although my,
yeah.
my, my longer term is still going to be around 25.90 somewhere. But yeah,
Oh,
already
okay.
here, if it holds here, it's could mean that the correction is over. But we're turning around the 50% of that move down. So
Yeah.
it's I think still undecided here. Could perhaps been a bit held back by the outlook of a hawkish FOMC, whatever they do. But
What do
yeah,
you
I
think?
think all in all, we're still correcting at lofty levels. I still think the longer term is still for higher metals. Silver pretty much the same, although it did not reach the big support box, just around 30 down to 29 and a half.
Yeah.
That's really a big box for me. Yeah.
Okay. All right. Did you have a view on yields in here?
Well, yeah, that's what. Okay, I don't see. Although the inflation was sticky, the rest of the numbers holding up. This we are going to get the PMIs out, so they may move the needle a bit. To me, we are still in this zone of not going to say equilibrium because we are at the top end of the equilibrium zone. I
yeah.
think people made a lot about 420. I think 420 is just equilibrium. So if you go up 10, 20 BPs above and then 10, 20 below, I wouldn't really call the end of the world on the back of it. So here we are at the top end of what my reasonable zone is. Um,
Yeah. Okay.
the problem is, well, not the problem, but I think the market had to reshuffle the cards, their cards a bit due to that labor report, due to that inflation report, the
Yeah.
expectations now for the Fed being whatever happens hawkish, whether it be a 25 or a standstill. But the wording could be hawkish, so that's I guess why we are pulling back a bit higher in the government bond yields.
Okay. And we also have BOJ this week, right?
Yeah, that's going to be a tricky one. I still think that they may do something because the numbers are supportive. Ueda also said prior to sending out those other two messages that but I'm not sure whether it's him or other members of the Bank of Japan that they were hesitant to move this month. But in his book, I think we are still in for a hike, but I'm very unsure to know whether it is going to be at 25 BPs or something less, like a 10, 15 BPs, and then we'll see what happens after that.
Yeah, I have a small short on that I'm gonna, it's kind of like a lotto going into the Fed and the BOJ.
Yeah, I
Yeah,
think we're through a small level here, through that
yeah,
153,
yeah,
65.75. That's where I thought we should have capped, but or 153.80. In yen,
yeah.
you're never down to the peep.
No, it's a mattress, not a line.
Yeah, exactly.
Right. Yeah.
Um, and if if the market continues to think that the FOMC will be hawkish in the Bank of Japan, maybe a bit less
Yeah.
so, that
It
could
it could blow.
push blow. I'm not sure, but visit 155 or close to 155. It is very possible before we get to the FOMC Bank of Japan. Um, we still have numbers coming out. Yeah, we have the PMIs today. Then we have the retail sales tomorrow in the US. Anything can really still change until the FOMC. Um, yeah, numbers could
Okay.
get blown out a little bit if the market is jittery about expectations.
Okay. From listening to you last week, I have a sense of, you're still negative euro, but something you were probing that I found interesting last week was the long side of Aussie.
Mm.
And I'm sure uh, our audience and the whole cosmos would like to know why you're stalking this for a low.
Um, I actually went out of it, traded it around a bit, but then I gave up on Friday just because of the US data really. And on the back of them,
But I sense that
yeah,
think
I am, and it could be one.
constructive.
It could be one that I'm actually waiting for the FOMC. If the
Okay.
market wants to buy dollars into the FOMC, perhaps right at
Faded.
the FOMC. It's one of
Yeah.
those, and actually sterling is the other one. It's one of those currencies that I thought there may be some need for those two going into year end, but. I have to revise my timing on everything because I got the impression that everybody is waiting for the FOMC to be out of the way to then do their year-end stuff, which is going to be spectacular if everybody is waiting for it, because then they will only have like 4 real trading days to execute everything, and we could see some really violent moves post FOMC, I think.
Okay, that's going to be the
Wednesday.
Fourth of July day of the week. So
Yeah.
fireworks Wednesday. People jockeying around, book squaring for a couple days in front of it.
Yeah, it could get a bit special once the FOMC is done. I'm going to be riding trains instead of standing in front of them.
Hmm. I
And
like
that's
that.
going to be that's important to take into account, Kman, what you just said, riding trains versus standing in front of them, because
That's
when
good.
you get into the end of year flows, you don't know how far and how long they're going to go, and standing in front of them is I've tried it in years past before I really understood what year end flows were. I'm talking about early 2000s. I've always found it extremely dangerous. And so after that, over the last, like, let's just call it like 15 years or so, I'm more on the whatever the flows are doing at the end of the year, I'm either going to jump on or I'm just getting out of the way. Period. End of story.
Yeah,
Well,
yeah,
well,
that's
there is one song. Don't get on that black train. All right. So anyway, there is a song. Don't get on
there's a
that.
song for every occasion, Dale.
Really? Oh,
Oh
okay.
yeah, there is a song for every occasion.
Josh Turner, I think it is. Check it out. It's a great tune.
I want to say, I want to hear what that
Oh,
that song is for scalping
Let's
pips.
look it up afterwards.
what's that song, Blake?
For scalping pips. Somebody make me a song.
Ah,
I want to hear a song for
Oh,
that one.
okay. I'll
Hey,
write one.
all right, Dale. Well, if you don't mind, I'll take over from here, and then
Okay, I'm gonna start writing the song, bro.
please do, please
All
do. All
right,
right.
go ahead. Oh
So,
yeah.
Ryan's going to be out for the next couple of days. He was on the Flow show this morning with you, Kman, and you guys were like, just discussing everything that was happening in the markets. One of the things that and I heard you talking about the yen. And I want to talk a little bit about the dollar yen because the BOJ is meeting this week, and expectations have really come out of the market that they're going to do anything this week. I'm looking at it, past the 161% extension here. We're at fresh new highs. I see it in a bit of a wedge, just like we had a wedge on the way down. We've got a wedge on the way up. You can, probably look at it like that or like this, something like that. Um, wouldn't a surprise be, and I'm asking you this, from expectation wise, wouldn't it be a surprise if the BOJ actually raised by 10 basis points?
No, I don't think so.
You don't
I
think
think the
so?
market is divided. I mean, whatever those strategies that at banks or so, I've read the articles. It's come on. I mean, they're just trying to get clicks. I think it should not be a surprise. The issue is if they only do 10 BPs and we get a very hawkish FOMC, how long is a hike going to last? The impact of it.
Yeah.
Remember, we had those hikes, and it is only when the U.S. data turn south that dollar yen really turns. If you look at it over the summer in August, everybody was blaming the Bank of Japan, but let's not forget that we had the signs of a weakening job market at the time in the US, and that's going to be the precondition to me still. Yeah, there's going to be an impact if they hike. You can fall back to 151, 152. It's all very possible.
Yeah.
But what's the long-lasting effect? That's always my question.
It's of course we've got data this week, and
Hmm.
we're going to start off with obviously the PMIs today. We saw some, I would say, mixed PMIs out of the Eurozone. Once again, we see services data coming in a little bit better. Manufacturing data both in the Eurozone and the UK looking a little, weak-ish again.
Hmm.
We have the same in US. Well, we have data coming out in US today where PMIs, services PMIs expected to be at least, better than and not in contractionary situation where we have, manufacturing data still should come in below 50. That's going to be pretty important data today, I would think. But if you take a look at yields, because Dale, you were talking about TLT, or I
Yeah.
think you had TLT on your screen. I want to show you guys one of the things that we were talking about in the Forex Analytics chat room just a few minutes ago was the 10-year hitting and closing up that
The gap.
the gap fill. Yeah,
Yeah.
we closed it, and ever since this Sunday, we've kind of moved lower, and we've been drifting lower since then. And I was saying it's going to be a little bit more difficult for the dollar to make headway to the upside if this 10-year yield or if yields continue to drift lower here. The euro is still struggling. The euro's at 105, but I think it's a well-worn range, right? Between 104.50 and 106. Can you see, and I'm going to ask Kman this, what's going to get us above 106? I don't think it's going to be the Fed because we have obviously everybody's pretty hawkish on everybody's looking for a hawkish cut, if you
Mm.
will, right? That's what the whole market's looking for. The market's looking for the Fed to cut, and then the Fed's gonna, set expectations for maybe two or three cuts in 2025, and that's it. But what could get us above 106? I mean, my assumption it's going to be end of year flows, if anything. What do you think there?
Well, that's exactly what I expect. Well, I'm no, I have to rephrase. It's not exactly what I expected. We are going to trade above 106, but the potential of going above 106 is probably going to lie with year-end flows.
Yeah.
Um, and yeah, well, I don't think everybody expects them to cut 25 and then be hawkish. I do for sure, but there's quite a few voices coming also that they could just pause in December, and then then I don't really know what to do because it could get a little explosive in the dollar before anything else happens, and would potentially be the most difficult year end to trade if they really pause. Yeah, wow.
Okay. So that's a really interesting thing that you just said. You just said you think there are a few people out there that believe that the Fed is actually going to, leave rates unchanged.
Yeah.
That means they're exercising hesitation in selling dollars right now because they think there is a risk that the
Mm,
Fed could leave rates unchanged
mm,
and or obviously, maybe cut 25 and be really hawkish. So, with all that being said, one of the big risks for the dollar would be is the Fed does cut, the Fed does leave the door open, and then the Fed, you have Fed Chair Powell, puts his Santa Claus hat on, and equity markets really take off into year end. That would be my thought, right? Because what you just said means there are some people that are expecting some a fairly hawkish
mm.
FOMC.
Oh yeah, I think no, but I think that is one of the main reasons, but it's supported by the data as well. One of the main
Sure,
reasons why
sure.
people
Yeah.
think that the FOMC is going to be hawkish, and I'm in the same camp. Now, we have seen many times, and that's why really we need to be very careful with what we do right now. We have seen many times that you even get a very good a good report, good data, hawkish, whatever you want, and still the dollar gets whacked. I mean, don't look further than the end of 2023. The start of the dollar decline in at the end of 23 was a good jobs report, and that's nothing is excluded this week and towards the end of the year. Nothing. But I do think into the run up, the dollar should be okay because of those expectations.
Yeah, yeah, okay. That's some good comments there. I wanted to talk about this really quick because it was Sunday night last night, and the market was really, really excited about what was happening with Bitcoin, and we basically saw Bitcoin rallying right to channel resistance, 161% extension, and we said that bulls should be careful now. This was last night, and as you can see, Bitcoin has turned lower, and now we're actually down on the session. And no, I'm not a Bitcoin bear by any stretch of the means, but I think if you are bullish Bitcoin, you can see how we've pulled back from 106,500 or wherever we were at all-time highs. We've pulled back about $3,000. That's not a huge pullback, but it is a little bit of a warning for bulls. I think I still believe that you want to buy crypto on dips. You want to buy Bitcoin on any dip back down towards 95, 96,000, and be very, very careful while you're up here. I wouldn't want to be short, that's for sure. But I think you want to be buying dips versus trying to buy into rallies at this stage in the game. Dale, we have this week. It's obviously a very big week in the market. Stocks are still holding up really well. We've talked about the importance of the 60-35 level, sixty
Yeah.
thirty level in the S&P. It's something that we literally write down every single day of last week on our bias chart. We do this bias chart every morning with the ForexAnalytix subscribers in about 45 minutes from now. That's obviously a very key level. What do you think is going to happen? What are you going to do with stocks here? I mean, do you think we rally into year end, or are you excuse me, are you looking to fade the market? How are you going to trade equities here?
To me, it looks like there should be maybe nothing to stop it to go to new highs. But I'm not long, and I'm in puts in Nvidia. So there are some cracks in the market, but you have to trade the cracks, and the cracks like Nvidia, the housing stocks, the industrials. Breath wasn't good at new highs, so I'm attacking it more like getting the sectors, shorting sectors that are not demonstrating relative strength. I mean, put up NVIDIA. You got it there.
Hmm.
Yeah. So, I mean, if like, for example, say the S&P's rally 100 handles from here, I'll add to NVIDIA positions because I don't think NVIDIA is going to make a new high in that circumstance.
Yeah, yeah.
So,
Okay.
so that's what I'm doing. If they want to rally the market, I look at it as an opportunity to add to the positions I have on stocks I'm bearish.
Yeah, there are certain stocks that have just gone parabolic that I think, whether it's Nvidia, you look
Yeah.
at,
But look at the housing
balance.
stocks, Blake. That's a big deal, okay? Because we did have,
What's the indexes, what's the housing index? Is it
I
SMH?
think,
No,
no,
that's
that's
some of the numbers.
semis.
Yeah.
XBI, I
Is
believe
it
it is. That's
XBI?
a builders. But you could take like D.H. Horton. Yeah, look at that. Oh, that's biotech. I'm sorry.
Yeah, that's biotech.
That doesn't look too good either.
Yeah, I'm
There you
here's
go.
no, this basic materials. I've home
Yeah,
builders.
see, yeah,
But
there are weak pockets in this market. In fact, it's mainly like it was a few years ago, the Mag 7
yeah,
again.
right, right. Okay. Well, so you're not looking at the broad market. You're looking at just individual names at this stage in the game.
Yeah, I have sectors. Housing looks weak. Airbnb. The banks are the strength, but they look like they're rolling over. I wouldn't be long for the next 5% if there is 5%. Okay, I wouldn't be long because one day we're going to walk in overnight. I don't think anyone's going to ring a bell um, for when the correction's going to ensue. So,
Yeah. Yeah,
you know, I mean,
it's going to be very, very interesting, beginning of the year, in my opinion, this next year.
but that
But first,
60-35, if that goes anytime in the next, several days this month,
yeah.
there could be a nice bear raid because it is thinning out.
Right, right. Just this morning, in about an hour and 15 minutes, we're going to get the S&P PMIs. So keep that in mind for those of you that are trading equity market or trading currencies. We have the Empire State Manufacturing coming out in just a couple of minutes. So we'll pay attention to that as it's being released. Kman, any last minute thoughts for the day and what you're thinking as we go into the first day of the last big trading week of the year?
Um, yeah, there's one thing that is keeping my attention, and that's sterling this week because um, there is a possibility that that weak GDP last week was a one-off. There is this possibility, and it looks as if the market may be thinking the same. Now we had the PMIs out. I still haven't completely given up on the sterling for the year end. It was one of my currencies that I'm really watching, monitoring for year end. May have been maybe those who are surprising, and then of course we will have CPI on Wednesday for the UK and then the Bank of England. But yeah, could be the surprise currency still for year end. On the day itself, I don't know. I'm not looking to do much in euro. Yeah, if I get like really a very big, a sizable dip in the cable, I may enter again long. Yeah,
Yeah, it's we've got this channel, and I'm on the long side of
yeah,
sterling as well. I've got some euro sterling short, and I'm long some pound dollar. Just have been long this cable for a couple of days, and or actually since last week. And as long as we hold above this channel, I'm not really too worried about it. But
yeah.
end of year, you think there might be some demand there?
I would say so, but I mean that's just kind of modeling, trying to model the flows with my very simple, very simple model.
Okay, all right.
All these new aliens are going to need currency.
Who are the
All
new
these
aliens? Who are the
uh,
new aliens?
Oh, they're in the drones over our skies right
You,
now.
you
Okay. Oh, and Musk is going to send another 40,000 up in the sky soon.
Huh? Who is?
Musk is,
Musco.
Musk is going to send another 40,000 satellites up there. There's
Yeah.
going to get crowded. Huh?
You
Empire
think
State
it's
Manufacturing came in lower than expected, actually quite a bit
Woo!
lower than expected.
his
Just a little heads up.
economy's weakening, man.
And
I
and just so you know, Dale, you remember Joe Perry, who
I do, Joe.
worked with
Yes.
us, and worked with Bloomberg, and he went over to
Right.
Forex.com. He sent me a drone footage that his neighbor sent, and it was pretty wild. He sent it to me over the weekend. He's like, "What do you make of this?" And I'm like, "Oh, it was loud and big," and I'm like, "I would have shot it down," and that's why. They don't send them over the skies in Arizona because I was talking to all the other parents. We're like, we just blow that shit out of the sky. I mean, we don't,
Yeah.
we wouldn't mess around, but we have different gun laws over here.
Oh,
So,
okay. All right. I'd like to. Well, I hope they come.
yeah, I mean, me too. I mean,
Give you
we'll
some,
be popping
huh?
them right out of the sky.
All
So,
right. Anyway, it's kind of weird, isn't it, man? It's like the
it
Twilight
is
Zone.
very weird.
Okay. All right. Well, we do have Jim with us today.
All
Um,
right. Well,
Jim
Have a good
Carroll.
have a
interview
great
there.
interview, Dale. And I
Yeah,
need to mention this, guys, really quick before Dale takes over. I'm sorry, Dale. I didn't want
that's
to
all right.
intrude, but I have
No,
to.
that's all right. Oh,
So
yeah.
up in the next hour, we will have our holiday offer for ForexAnalytix. We're going to be giving the the steepest offer on our semi-annual annual subscriptions ever. So semi-annual, not annual, not monthly on our semi-annual. The and also for those of you, I know I mentioned on the week ahead video, we have a special for like this Christmas holiday as we go into the new year offer for trader funding program. It's 30% off, but we have actually a new funding program that will be taking place after the new year, which you'll basically you can bypass an assessment and go straight into a trader funding program. And the details will be released after the beginning of the year. But if you want to, take advantage of a trader funding program, 30% off is it's very steep on any new assessments or any new assessments or any reassessments. So there you go. Just wanted to mention that. You guys make sure you check out the trader funding program, especially if you want to access larger amounts of capital. We have a lot of people that are doing it, and very, very, very positive results for a lot of traders. So, Dale, it's all yours.
All right, Blake. And yeah, get active, learn, and what an opportunity to trade an alien invasion. So it's going to be historic, Jim. I know. I'm surprised the VIX. I mean, I've been around a while, Jim, and I've never had this chance to trade an alien melee like they say is going to happen here. Is the market pretty complacent about this invasion?
Can you hear me, Dale?
Yeah, I got you, buddy.
Good morning, Coach.
Good morning, buddy. How are you? It's pretty
Al-
crazy out there.
Alien
Huh?
invasions.
Yeah, I
War.
mean, I, I, Vic seems very complacent about these drones.
Well, I guess the drones just haven't shown up in price action yet.
Yeah,
Um,
yeah, yeah, that's right.
I haven't watched the show, and I don't even know if it's still on. They used to have the shows where the teams built robots, battle bots.
Oh, yeah, yeah.
And I actually think that there's a show someplace where they basically are racing drones or doing drone battles. I don't know.
Huh, yeah,
Drones are not a new thing, but it certainly seems like things have escalated in their applications and presence.
yeah,
So
yeah. So
it's
we have the eye in the sky.
the eye in the sky. Okay, now
Mm,
actually, we should check with Blake to see if he knows who had that song, because you and I are old enough to remember the eye in the sky.
yeah. All right. Yeah.
But
So, yeah, it's just, kind of the Rod Serling Twilight Zone episode surreal that we're living in right now,
yeah, yeah.
right? Just
Well,
another
and
thing.
you probably remember a show that was even creepier called was it One Step Beyond?
Oh, yeah, I do. Yeah, I love those shows.
Yeah.
And what a lot of people are just, just saying, well, it's just another thing in the Middle East, but I think there were ancient writers that talked about Damascus will be in ashes. And I think you know what I'm talking about.
Well,
So,
yeah, that's another one that doesn't seem to have shown up in
yeah,
the indices or any of our
look, yeah,
volatility signs.
it's just going to go, and, and keep going till it stops, probably exhaustion. So tell me what you're seeing. Smooth sailing? Question mark. Okay. All right. I like that question mark.
Well, it's always a question mark with me because you just can't know what you can't see, and none of us can see the future, or at least I can't.
Yeah.
And I haven't found anybody who does it consistently.
All right.
Everybody gets lucky sometimes.
Jim's with an RIA. Take a screenshot so you know how to get a hold of him. I'm a big believer in people diversifying away from themselves. Especially with retirement funds and so forth. So Jim's part of uh, a great team, and I'd be comfortable with his decision-making process. So
Well,
I
thank you,
plugged
Dale.
in.
It's very kind.
So what are we looking at going into year end, my friend?
Well, so let's take a peek. Um, well, yeah, r read this and memorize it. The quiz that comes at the end.
Yeah, okay.
Um, so
I'd like to change the disclaimer
what's that?
because it's inaccurate. Because past performance is indicative of future results. In most cases, it is.
It's certainly the best clue you've got,
Yeah,
and I have yet to meet anybody who makes an investment with any kind of fund manager or investment advisor who doesn't look at their past
yeah,
performance and draw some
right.
conclusions from it.
Yeah.
So,
Anyway,
so here we are.
okay.
Santa's about to arrive in 2024. This chart looks all the way back to, pre-COVID times.
Yes.
And, um, it looks as though the August VIX spike is
Yeah.
in the rearview mirror. We had some of what I refer to as little echo spikes after that, but
Nothing
um,
much. All the way
nothing
back at the
much.
lows.
Nothing much. Yeah, and getting a little closer. This is with SPX in the top panel and VIX at the bottom
Right.
panel, and you know whether we definitively break to new highs above 6,100, or I don't know what's going to happen, but
I don't
um,
think the MIG, even if that happens, Jim, I think there's a chance the VIX may hold if we're getting, or even, surprise people and maybe go up
yeah,
during the last phase of this blow off.
right, yeah. Well, and we've seen that happen before. That's a good point. I mean, if you remember the first part of 2018, that's exactly what we saw. We saw the S&P and VIX going up together. That's one of the
Yeah.
things that we watch carefully, is that correlation of the two.
Will that be
Um,
a tell?
that
When
certainly that certainly gets my spidey sense tingling.
okay,
Um,
I like that.
when we see, if you see VIX go in the same direction as the spies, if you see VVIX go in the same direction as the spies, when those correlations get positive, you have to be paying attention.
Okay.
Look, nothing is perfect, right? But, you know, um,
Okay. I
give you
know
some
this is
guidance.
I know this is not a vixologist, but maybe you could mentor me on the move index. I
Oh,
know you
Dale,
no? You don't want
No,
to talk about it?
I didn't include it in my slides this morning, but
Okay,
look, we've seen volatility in rates markets that makes, the volatility in the equity markets look really calm.
right.
Um, and, the question becomes, when do rates markets begin to influence equity markets?
Yeah.
And, so I keep track of the move and the move
The
relative
move
to,
is saying no stress. That's what I'm saying. It's saying,
yeah,
isn't that it? It's a measure of stress. But the bonds have sold off almost 10 points
mm,
after that pop from the new Treasury Secretary.
right.
And so I don't know, people are saying this is bullish, and I'm thinking, if the market could break without showing stress, maybe the market's going to keep breaking until stress shows up.
Mm. I see at least as much volatility in the rates markets as we're seeing in the equity markets. And, that's another one where I kind of scratch my head and say, okay, just be vigilant
Okay.
because, the equity markets do pay attention to rates markets. Rates markets, high yield spreads tend to be the canary in the coal mine.
Right.
We're still okay there. Um, but that could change. And I've got my eyes peeled.
Yeah, because if you have yields going up with valuations going up at the same time, the rubber band's being stretched on both sides.
Exactly. Exactly.
All right, I'm not going to interrupt you anymore.
So I've
Go,
I've
go,
got a
go ahead.
I've got a new one for you. This is something that has just made its debut. I've posted this a few times on Twitter and making its debut on Substack. Um, you know, my I've taken the
Right.
Vixologist and turned it into Vixology on Substack. And right
Okay.
now, as of Friday's close, this composite of indicators that look at the markets through the lens of volatility says, we're in bullish territory, um,
Okay.
67%. And, but the question is, so what? What does all that mean? Why should I care? And so what I thought I might do this morning was take a look back at that July, August timeframe and see what we might have seen back there. So on July 16th, you had S&P making a fresh new high. The market
Yeah.
had been bullish,
Right.
coming out of the April pullback. But what you saw was that this composite indicator, the VIX mix, was only in neutral territory. And if you squint down below, you can see that VIX had actually started to move a little higher over those
Yeah.
few days.
Yeah.
It's not a big move, but again, talk about the correlation between S&P going up
Yeah.
and VIX starting to creep higher. And what that said to me was, it's not as bullish from a volatility perspective as the equity market is. So if we run forward a couple of days, right, the equity market had started to pull back. You had come back, roughly 2% in the S&P. And this composite indicator had moved from, sort of a high neutral spot to 27%, which is, a drop of 31 points in 2 days. That kind of got my attention.
Yeah.
Obviously, VIX had moved up, SPYs had pulled back, so. And remember, the backdrop on this was, okay, what's going on? Is this, yen Mageddon? Is this the unwind of a dispersion trade? What's happening? People were starting to look around for why the S&P would have pulled back, but not a big deal, but 2% in a couple days is you're going to pay attention. Um, and I was definitely paying attention because, again, my composite indicator had dropped 30 points and moved from neutral to bearish territory. So then you fast forward a little bit, because I remember vividly, we had this little 4-day push higher into the end of July, where the S&P moved itself back up 2% off of that, swing low. Is everything okay again? Well, the VIX mix was saying we're still in bullish territory or bearish territory. So, hold on to your hats. We weren't prepared to buy the reversal. We were still bearish. Again, you never know what's going to happen the next day. We certainly didn't know that, August was going to be greeted the way it rolled out, but, we weren't bullish. Let's put it that way.
Okay.
So let's now drill down inside that composite indicator and look at one of the components. We got more than a dozen separate components that roll up into that composite. If we take one of them, one of the things I look at is the ratio of the midterm VIX futures index and the short-term VIX futures index. Sorry about this. It's moving around on its own. And those are expressed in two ETFs that we can track. VIX-M is the midterm VIX futures. VIX-E, also VXX, uses the same index. They're both based on the short-term VIX futures. And what we know is that the front end of the term structure is going to move faster. It's going to rise or fall faster than the middle. So we would expect VIX-E to go up and down faster than VIX-M. And if we look at that as a ratio, it might tell us something. And so we track that ratio as part of the VIX mix.
Wow.
And so here's what we saw back, the end of mid-July to the end of July. If we go to that first down day, we saw that ratio go from bullish. Notice that it had been bullish, all through June into the middle of July. And then it had its first crossover on that first down day, July 17th, had a second crossover down on the what day was that? The 24th. We had both of them down. And what's interesting here is that even when the S&P had that rally into the end of the month, we were still underwater on both of these moving average pairs. So, again, nothing's perfect, and I'll demonstrate that in a minute. But, if you were looking at this, that move into the end of July, based on this indicator, was a head fake. And so if you had decided to be short S&Ps or long volatility, you would have had something here to say, hang on, don't close out your position, don't switch up and go the other way. Just be patient.
Be patient.
And that patience would have, paid off pretty well.
Patience pays.
So what's interesting is, I think if you talk to a lot of people about August 5th, when, VIX in the morning went up into the 60s, they would have said, hey, I didn't see that coming. Who saw that coming? Nobody saw that coming. How could that happen? Well, maybe you couldn't know that that's what it was going to do, but, you might have had some sense that to be leaning bearish as opposed to be leaning bullish.
Yeah, you don't know the magnitude, but you knew the right side to be on.
You never know the magnitude. You never know how far or how fast.
Yeah.
is what I
We
say.
try, we attempt it. We could use fibs. I mean, I'll tell you
Yeah.
what. I mean, I know what I'm looking for when I get into a trade.
Mm-hmm.
Whether you and I'd still agree with you that we never know, but it's still part of my strategy to know when I'm right.
Right.
I'm not going to say if,
Yep.
because the if is I'm stopped out. Okay,
Right.
but when I'm right, I know where the potential of the move is long term.
Exactly.
For me to sit towards those targets, that's a problem because you
Right.
brought up the key word in the business. It's all in our head, and it's a lot about patience, and most people don't have it. That's why there's something called FOMO and
Right.
impulse trading, which are the
Exactly.
two biggest enemies of a trader that will make their account terminal.
Mm-hmm.
Anyway,
So,
oh
so anyway, this
man,
is just drilling down on one of the components of, this
yeah,
bigger indicator to show, that you can dial down and get some information from, and again, this is strictly looking at what's going on in the volatility
mhm,
complex, as I like to call it. This is the comparison of short-term VIX futures, the basically a construction of the first 2 months, and then midterm, which is fourth, fifth, sixth, and seventh. It's a blend of four different contracts that are
yeah,
sitting behind that VIX M ETF.
yeah,
Now, no single indicator works all the time. So, we come out of that and into October, going into the election, and
yeah,
volatility was telling you to be bearish.
yeah.
Um, and that shouldn't come as a surprise. I mean, that was a huge
Uncertainty.
event.
Yeah,
That was a huge event. We had no idea what was going to happen, who's going to win. It's a toss up. If Trump loses, we're going to have, civil unrest across the
right,
country.
right.
People were definitely getting hedged up. And, that showed up as a bearish signal going into the election, um, and which obviously reversed quickly. But, this,
Yeah.
this is to say, you can like a particular indicator, but you can't trust it to be right all the time. And certainly, you need to look at other things to either confirm or deny positioning that might be based on one indicator.
Confluence.
Hmm.
Jim looks for confluence. Okay.
So, interesting that pre-election event risk. If I look, get back up to the aggregate composite on October 31st, going into that election, the VIX mix said, we're 13%. We are bearish. So, um, again, was this something to be acted on? Not necessarily. It's something to be aware of. Every trader has the things that they trade. Whether it's forex, rates, equities, whatever it might be. What this would say is the sentiment around you, whatever you're doing, the sentiment around you is bearish. So just, keep that in mind. Now that may mean, hey, I think that the event's a nothing burger. And so I'm going to take advantage of this bearishness and put on some bullish trades because once the election's over, we're going to head the other direction.
Yeah.
And, and some people no doubt did that. Um, you again, you just have to act in an informed context.
Okay.
So, back to where we left off on Friday, we've got, S&Ps hovering up around those all-time highs, and this morning looks healthy last time I checked.
Yeah.
We've got VIX settled down below 15.
Yeah.
And my friend Dean Kernot says, nothing bad happens with the VIX below 15. And
Like that.
historically, he has been right about that. But it doesn't mean it's going to stay below 15. And we're going to keep our eyes open. We've got VIX mix in bullish territory, but it's not as bullish as it might be. So again, there's a mix of signals in here, some of which are more bullish than others. In the aggregate, we're in the green. And I would say that while we're in the green, you don't expect anything bad to happen. It's, these things don't just happen overnight, as I tried to demonstrate with August 5th.
Okay.
There was time
It's a
to,
process.
it is a process. Almost every time I could go back to, every major volatility event that we've seen in the last 10 years and show how the sentiment was changing before the what hit the fan.
Yeah.
You didn't have to be blindsided.
Okay. Great presentation again, Jim.
So that's our story.
Yeah. Well, you could tell all the work that Jim puts into the VIX. How many RIAs even know what the VIX is, right? They may be out on the streets looking for a vixen, but they have, but they have, but they have no idea what the VIX is. So I'm, a money manager with technical skills that could see a market is always better than a salesman. And that's what most of those guys are. They're just asset collectors. Have someone with some market savvy as we enter, uncharted territory and a lot of different things happening, big changes happening. And, Jim, it's good to have you as a watchman for us to let us know when you see things starting to happen. So appreciate your giving spirit of coming here to F.A.C.E and teaching us about what you already know and put in hard work for that knowledge.
Yeah, and anybody who wants to keep track of that, I am now up on Substack. I will
Okay.
be keeping that current. That's vixology.substack.com.
Okay.
Vixology is like mixology, except we're not making
Cocktails.
liquor cocktails. We're making
All right.
volatility cocktails.
All right. Well, I can't think of a better guy that I would want to pour a shot for. So, Jim, really appreciate you coming here over the years, and I want to wish you and your family a wonderful holiday season.
Thank you, Dale.
Merry Christmas, brother.
My daughter got engaged over the Thanksgiving holiday, and
Oh, wow.
so both of my kids are now engaged.
Wow.
So
All right. Well,
it's all good.
congratulations. Yeah.
Thank you, sir.
It would be grandpa in a year or so.
Well, we have
Grandpa
the
Jim.
right now we have the grand kitten.
Grand.
The
Yeah, well,
we,
it'll be different. They
my
say being a grandparent is better than being a parent. I've seen
well,
it.
you get to take your revenge on your kids, right?
All right, brother. All right,
Thank
man.
you,
Jim
thank you,
Carroll,
Coach.
everybody, at Fixologist on X, and check out his Substack. And if your money manager's not doing a good job, you never know if you have a good one until you compare it to something else. I recommend Jim. All right,
Thank
so
you, Chief.
you're welcome, buddy. And that's a wrap, everyone. You could join the team in 15 minutes on the Morning Edge. Let's have a good week. Keep your powder dry. I think Wednesday is going to be the day to be aggressive. And I'll see you tomorrow for Turnaround Tuesday. Adios, and thanks again, Jim Carroll. They're thanking you, Jim. There you go. All right. See you, Laura, George, Galaxy.